Hello traders, it's Sunday afternoon, May 14th. It's time for our Sunday video. Let's take a look at our last two picks. Let's do some market analysis, and then let's find a couple of picks that set up well for this week. MDB was a stock that I really liked, and you can see how the video came out on Wednesday, right about here. Stock has not done a whole lot of anything. Market's been back and forth, so it really hasn't done a whole lot of anything either. But I do like the breakout on this stock on a longer term basis. So if we zoom way out, we can put the trend lines up, and these are our automated trend lines. You can see how this is a very long-term resistance level that's been broken to the upside, relative strength, and good volume. I still like this stock, and I like this horizontal breakout right here. So I think it's going to continue to go higher. The problem right now is we don't have a market tailwind. So that's why we're focusing primarily on day trading. We'll get into market analysis in just a second. PLNT was the second stock that I highlighted in my last video Wednesday. That is a bearish pick, and you can see upward sloping trend line, breach to the downside. Also, a couple of really big trend lines right in here that came into play as the stock fell post earnings. B means earnings before the open. So that was the initial reaction to the earnings announcement. It broke through all these trend lines and it broke through the major moving averages. And now it's also been testing this upward sloping trend line. There is great downward momentum. I believe this stock is weak and it's going to continue to sell off. What we're seeing is oftentimes we'll get an initial move in the underlying stock and then it'll digest those gains or losses for a few days before it continues lower. And that's what I believe is happening here. You get this big initial drop. You've got some profit takers on that drop who are starting to buy back in their shorts, but the selling pressure remains strong. As the stock does not bounce, it's going to be a sign that sellers remain aggressive, and then the stock will take its next leg lower. You can see the relative weakness here. You can also see the heavier volume. Let's take a look at what it did on Friday. You can see Friday was a down day. Stock sold off, didn't really recover much. So I still like PLNT for a short. Now let's go in and take a look at the market. This is your price action from Friday. We had a gap up. Gap and go is not our best scenario because when you have a gap up, the market's already moved substantially. For it to continue to add to those gains becomes fairly difficult. Gap reversals, on the other hand, those present a better opportunity for us because in a choppy sideways market where neither buyers nor sellers have been able to get anything going, the tendency is going to be to try and reverse that gap. And as you do that, you get momentum. Once the momentum kicks in, the sell programs kick in and you get a nice move lower. So gap up, your best early opportunity is going to be on a gap reversal if it happens. So you should be looking for bearish picks. If you had a gap down, your best early scenario is going to be a gap reversal. So you'd be looking for bullish picks. I have an article that I posted to Reddit. I'm going to make sure and post that link in the description of this video. Please go through and read it. There are really three basic patterns that we're seeing each day right now. And the earlier in the day that you can recognize these patterns, the better you'll be able to plan out your day. We are in a mode where the market is doing nothing. I can make equally compelling arguments for the market going higher from here or lower from here. Let's just take one of the current influences, the debt ceiling. If by chance, big if, politicians get their act together and they sign a deal, the market will lift off. What's more likely is that both sides are still battling it out and they drag their feet till the 12th hour and the market gets very, very nervous because they're not making any progress. And then you get a big sell-off, a warning sign to politicians, get your act together. And then at the 12th hour, they get a deal done and then you get a nice bounce back. If we do see that type of sell-off down to the major moving averages, let's put them up. I think that's going to be a pretty decent entry point, especially for longs, especially if it is all debt ceiling related. Now, if it's not debt ceiling related and you start getting additional banking issues and the credit crisis seems to be spreading, whoa, completely different story. And right now, PacWest is the next bank that's in the crosshairs. And I believe that in the last 48 hours, 10% of their deposits were removed. That is substantial. So we need to keep an eye on these banks. I don't think that we're in the clear yet as far as a potential banking crisis. And that's another reason that I am not going to be out there selling bullish put spreads. Market's not going anywhere. It's trapped in a range. There's your horizontal D1 resistance. We've tested it a couple of times, not able to break through it. And we have the major moving averages lending support here. So the market is compressing, compressing, compressing. The temptation would be to sell premium. Well, as the market compresses here, one bit of news is going to send us dramatically through this range. It could be on the downside, could be on the upside. We don't really have the type of news that we need right now on the calendar this week to force a big breakout or big breakdown. Retail sales, industrial production, initial jobless claims, which, by the way, initial jobless claims have been ticking higher the last few weeks. None of those is really material enough to force a big market move this week. So I think we're going to continue to stay in this compressed trading range. We just had the FOMC statement. We just had all the mega cap tech earnings. We just had the jobs report and all the big economic releases. If those couldn't get anything cooking, the likelihood of us getting anything going before Memorial Day is very, very slim. So we should expect that we're going to continue to see this type of price action. And that's another reason that you should read that article, because the daily price action is going to fall into one of those three categories. And in the back of your mind, you should pretty much be telling you that buyers and sellers are active, and that once an extreme for the range has been established, watch for that first trend to start to lose its momentum and expect a reversal, because that's what we've seen almost every day. And that's why you're getting these long, rangy candles that have a mix of green and red. Long tails, in some cases, some wicks in there. So there is movement, not a lot of volume. You can see how the volume is starting to dry up. So if you get a low volume inside day, you've got to just focus on a handful of stocks that are breaking out through major technical price levels on heavy volume. Stick with that handful of stocks and then try and time your entries and exits based on the market cycles during the course of the day. We've been able to do this very effectively the last few weeks in the chat room. It's amazing that we've been able to still pick some very, very good stock plays throughout the course of the day, keeping our overnight risk at a minimum. So let's go through some of the searches and let's see what's coming up. We'll have a couple of picks that we can take a look at for Monday and Tuesday, and then Wednesday I'll be doing my next video. So don't expect a lot of movement from the market. If we get a gap down, your best initial first play is going to be to wait for support and to look for a gap reversal and focus on good, strong longs. Get a gap up, your best first scenario is a gap reversal. You should be looking at the short side and seeing if you get that reversal. The gap and goes, either way, gap up, continue to go higher, not that common. Gap down, continue to go down, not that common, and they don't present very good trading opportunities for us. Open inside the prior range on light volume, not a good scenario for us either. That's probably the worst scenario of all of them. So let's take a look. Let's see what we've got coming up on some of our searches. And I'm going to start off with the bullish side, and we're just going to go into green, royal, flush. And I'm going to take a look down the list here and see what we've got. And we'll go into the daily chart, take a look at DLTR, nice little breakout right in here. And I'm not really seeing anything else that catches my eye. I did take a look at a couple of searches earlier, and this breakout times 2 means that we've got some nice breakouts to the upside. And this is Google. I actually like this. You can see how it's been able to break out through this high plus trend line and through this high plus trend line and through this high minus trend line. Those are very nice on heavy volume with excellent relative strength. I know Google is going to be your long play of the day. So focus on Google, look for those entry points, and here's the type of price action that we'll want to see on Google Monday or Tuesday or Wednesday. Market down, down, down. Google opening flat, flat, flat. As soon as you get this market bounce like that, Google is going to be leading the charge higher. If you get into the trade a little bit early, Google is going to hold its relative strength. So you won't have too much downside risk. Of course, you want to make sure that you're waiting for that market support, but Google has buyers, and we know that from the price action currently. Let's put up a 5-minute chart so we can zoom in, and then let's overlay the SPY, and you'll be able to see what Google did last week. And there you can see stock opens up, market down, 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 down. This stock opened and it held all of its gains throughout the day. Later in the day, when the market finally gained some traction, the stock rallies about $1 or so. Still, if you had gotten in early here on Google when the market was still falling, or here, your downside risk would not have been that great because the stock has relative strength. And when we see this relative strength, we know that institutions are in there buying it. And you can see that during the course of the day, volume was not fantastic, but the overall market volume was very light as well. But it did have some pockets of strength. So I do like Google. I think Google is going to continue to perform well. Let's take a look at what we got on the bearish side. And actually, let's take a look at how PLNT did. I still like that short. And you can see how when the market had that gap reversal, market being the gray line, you can see how the stock crumbled very, very easily. This is still a decent short. So keep that one on your radar as well. Big gap down post earnings, breaking all these major trend lines, and the stock finishing near horizontal support. Any kind of market weakness, I think it's going to continue to go down. So let's see what else we've got. And EXAS is an interesting stock from the long side. I'll just put it out there. This is a nice long-term compression. The stock was able to get through major horizontal resistance and hold those gains. So I think this stock is going to continue to creep higher. Go to the bearish side, take a look at what we've got here. And I've flipped through a lot of these charts, and it's really hard to find stocks that have any kind of momentum because the market has been trapped in such a tight range that when you do get price movement like this in Adobe, which look good, still looks like a good short, below all the major moving averages, decent volume, had this nice little drop here, but then just a compression because there's no market tailwind. There's nothing to fuel the move lower. But looking at Adobe, I think that looks like a nice short to me. So I'm going to kind of cut to the quick, and I'm going to go down to MGM. I do like that upward sloping trend line here and this downward sloping trend line, both converging at the 100-day moving average, and the stock starting to show some signs of relative weakness. So if it can get below the 100-day moving average, that's the caveat, which comes into play at 41.49. So if the stock is below 41.49, I think MGM is going to set up as a nice short. And I also feel that Adobe does look like a pretty good play in here also, but it's got to get below the low from Friday. If it can crack that low, it would be a much more attractive short. There's the problem right there. You see that tiny, tiny volume? We want nice, heavy, robust volume. And right now, it's just very hard to find. So I'm going to continue to just take a look. PayPal had a really nice breakdown last week, but you can see most of these losses are all very marginal. 50 cent, 60 cent, 25-cent loss. There's not a lot really happening now. So we're continue to just scan down the list, see if there's anything else. But right now, Adobe is probably going to be the pick, possibly MGM. I think I'm going to go with MGM. So let's put that chart up one more time. but we need to see the stock below the 100-day moving average, and we want to see that continued relative weakness. Put up the 5-minute chart. There you can see the stock closed pretty weak on Friday. Market up, up, up. Stock closing on its low. And you can see how the volume was actually picking up. It was pretty decent. So that's why I like MGM. That's why it's going to be the bearish pick. You've got to wait for your moments. MGM's a choppy stock. I look at this right now and it's just not doing a whole lot. It has a slightly negative bias right now, but we're not stacking any red candles. Take a look at Adobe and see if Adobe had any decent price action that we could lean on. And it's a little bit more orderly. You can see how it does have a more defined downward slope to it, but also a nice bounce late in the day, also on good volume. I'm going to stick with MGM and that 100-day moving average. Keep your trading fairly light. If you can find some stocks intraday that have a mind of their own, they're oblivious to the market, heavy volume, D1 technical breakouts and breakdowns, that's where you want to focus your attention. Hard to find them overnight. Oftentimes we don't see them until a half an hour or maybe an hour into trading. But once you zero in on them, then you can see those stacked red candles, stacked green candles. You can see that heavy volume, and the market is not going anywhere. So you don't have to worry too much about having the market rug pulled out from underneath you. So you can really focus on the stock and what it's doing. Thanks so much for watching, everyone. I will see you Wednesday.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.